Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, August 11th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios. Therefore, what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. A little bit of economic data today in the form of unemployment claims. It came in at 266,000 versus the expected 272,000. So that actually is better than expected. Lower claims being better for the overall economy, meaning there is more employment. And then we also got importer prices came in at 0.1, which was expected to be a negative 0.2. So that's also better than expected. Then we had the natural gas storages came in at 29 billion cubic feet, was expected 24 billion cubic feet. So a build there on that front. Despite seeing a build in the natural gas, crude oil we saw earlier this week, crude oil is cruising higher right now, up $1.60 on the day. Really has taken back all of the losses seen in the past 2 days. So that's been a big move today. It's looking like we're going to try and fill in this area with volume here. I could easily see it's just bouncing between $44 and change to around $40. So right in that mid $40 a barrel range for at least a week or so. So I think it's going to find get into a groove right here. So we'll see how that goes going forward. Again, we've got cats and dogs living together. We've got gold up on the day, up $3, still pushing higher, despite the fact that we're seeing a big equity rally today as well. Bonds are giving up a little bit of ground, down over just a point, as people are pulling money out of bonds and throwing it into the stock market. Right now, though, I'm looking at the stock market as this is really becoming complacent. Everybody's kind of hunky-dory. We're starting to see a lot of retail investors come into the market. Once they start seeing the headlines of all-time highs, that usually is a precursor to the retail investors getting involved, and that is usually a pretty scary situation, especially when we see these volume numbers at all-time highs really starting to slack off. That means the big investors are starting to pull back on their buying and legitimately are starting to sell to those retail investors, which could be the precursor to a big sell-off. We are just way extended to the upside. The breadth is actually really coming off, which is an indication of lack of interest in the overall equities at these levels. So just keep that in mind. Make sure you guys are hedged appropriately, and it's probably not the best time to be buying. One of the things that's really pushing the market higher today is Macy came out with pretty good earnings, which is the ticker symbol M, and that's bringing the overall retailers higher. So they're really getting a lift off of Macy's earnings numbers. I didn't play Macy's, but that was the one trade that there was out there today. I didn't play it because there wasn't very much premium involved in any of those strategies. So as you can see here, the E-mini S&Ps up almost 11 points on the day. That's ticker symbol /ES. Same here on the 15-minute chart. As you can see, we're creating newer highs here in the E-mini S&Ps off the highs of the day, but still up 11 points on the day and creating new highs. This is a couple of trades that I did. This actually got filled yesterday, which is Gap, ticker symbol GPS. I just put it in order yesterday to get 50% or right around 50% of my max profit on this trade. I ended up having on the August 26 calls that I was short. I originally sold them for 27 cents and then bought them back yesterday for 15 cents. Like I said, it was trading 20 cents for the most part of the day. And then as the market kind of slid, I got filled on those. So I just put in a resting order to get close to the 50% of my max profit on that, and got hit. So that worked out nicely. All right, and then in United Steel, so United Steel, ticker symbol X, I had on a bearish put spread, low volatility as you can see, so that's the time to add debit spreads. And I saw this gap off of their earnings. I just felt that it was going to want to come down and cover that gap. We have since covered that gap, so I decided to cover that this morning and had on this September 25, 28 put spread. So I was short the 25s to define that risk and long the 28 puts, you know, when we were creating new highs in this market. And I originally paid $1.55 for that strategy, got out of it for $2.50 this morning. Again, started out at like $2.55 and just slowly ratcheted it down until I got filled at $2.50. Today's webinar is, going to be on the long call butterfly. It's usually scheduled for Friday, but we had some conflicts there. It's gotten moved to Thursday, so we're going to be doing that webinar today at 4 p.m. Eastern, which is 3 p.m. in Chicago. So check that out. You can go to ProTraderStrategies.com, get signed up for that. That's about all I got for you guys today. Hope you can all make it, and if you can't take that, take it easy.